Hey everybody, welcome to Mortgage Today for Wednesday, May 22nd, 2024, and oh, what a day it was. UMBS opened down 11 basis points in early trading. Stock futures were down 9 points. U.S. Treasury slipped ahead of minutes from the Federal Reserve's latest policy meeting that could provide more clues on when the central bank will cut interest rates. On when the central bank will start cutting interest rates. On Tuesday, two central bank officials advocated for patience on rate cuts, arguing that more evidence of cooling inflation is needed before the easing begins. The U.S. is also set to sell $11 billion in 20-year bonds on Wednesday, adding to pressure on longer-term debt. Price pressures have long been a key point for investors trying to gauge the Fed's next move, but following a report last week which showed inflation easing for the first time in 6 months, the central bank's view of consumer prices has become more closely scrutinized. Fannie Mae expects overall economic growth to slow and for mortgage rates to finish 2024 around 7%. Housing activity overall is expected to slow slightly. Inflation is expected to moderate over the summer, and the first rate cut is expected in September. Multifamily rents fell 0.8% year over year, according to Apartment.com research, while single-family rents rose 3.4%. The decline in multifamily rents is largely due to the increased supply, as we have had a record number of multifamily units under construction. Below is a chart of the number of units of multifamily building under construction has begun to pull back, where we saw a big spike during the pandemic. Today's only event that has any precedent of inspiring rate volatility was the release of minutes from the Fed meeting that took place 3 weeks ago. The fact that the 10-year yields held roughly inside a 1 basis point trading range after the release tells us everything we need to know. It was every bit as uneventful as we expected. Even so, was there anything to learn? Not really. Minutes were wholly unsurprising to anyone who's seen most of the recent Fed newswires. Bonds were slightly weaker in the overnight session due to UK inflation coming in hot, but mostly in the shorter end of the curve. That meant modest underperformance of MBS. Mortgage's average lifespan is still seen as being quite a bit below 10 years, so take cues from shorter-term debt as well. UMBS ended the day down 16 basis points at 100.37. We're back underneath that Fibonacci line at 100.427 with a floor at the 50-day moving average about a quarter below. In other housing news, luxury home builder Toll Brothers reported a 6% increase in revenue on the quarter and strong gross margins, albeit down on a year-over-year basis. Earnings per share rose 19%, which is pretty dang good. DEO Douglas Yearly said demand for new homes continues to be driven by a resilient economy, favorable demographics. They're making more money, big gross margins, yet builder sentiment is down. I think a lot of mortgage companies would love to have their problems.